All right, let's move on to Roblox Corporation. Brett's going to take a look at that company. I know that I see Roblox on almost a daily basis. We kind of shunned it for a while, but you can only hold off the dress to impresses and I think it's 99 days in the forest or something like that. These games that get super popular, and yeah, there was so about in the last week, Lady Gaga, I don't know how I know this, but well, I know how I know this, but she did a collab, they call it, with Roblox on Dress to Impress,
Was it
and like
actually
literally
Lady
that's all I
Gaga?
heard about for a week. What?
Was it actually Lady Gaga?
It literally was. So
Oh,
she
because my
literally
daughter
did.
told me about that, and I questioned
Yeah,
if it
see?
actually was Lady Gaga,
You
and I
thought it
told
was
her,
fake, right? Like,
well,
yeah,
I
no.
just, don't believe everything you hear on the internet.
No, it was. And
Okay.
she was playing. So everybody was on there trying to, oh, I'm going to log into a server with Lady Gaga. I'm like, oh, that'll probably
And then the
happen.
server shut
Yeah.
down.
But no, there's, I don't know, the clothes or something that she did. But Brett was super into it. That's all I know.
I'm definitely the one who didn't do it here.
Yeah.
But yeah, so.
But Roblox Corporation, the corporation, unfortunately for Ryan, not the game in this case, but they do make the game, or games, I should say. So symbol RBLX on the New York Stock Exchange. It operates a user-generated online gaming platform where users can create, share, and play games developed by a global community. The company generates revenue primarily through the sale of its virtual currency, Robux, which I'm sure both of you two are very familiar with at this point, as well as the advertising partnerships and now premium subscription service. The stock has just had a great year, up 187%. The stock is trading at $117 a share with a $81.3 billion market cap. Although the stock has recently fallen off its high at the end of last month after its Q2 earnings set a nice high, but it's come down from that a bit. However, if we zoom out a bit, looking at just since its IPO, it really had a price mania like many other stocks during that late 2021 period where everything was just absurdly expensive, to say the least. And it's really trading around that same range now, once again, after a few years really of quite a bit lower, trading $20, $40, and now we're way back up in that $117 range. So first up, let's look at some of the most recent financials. Some of the headline figures. Revenue was up 21% to $1.08 billion, driven by significant growth in active users and bookings per active users. Bookings were up a whopping 51% to $1.44 billion. Massive increase there. Operating loss, however, was at $322 million compared to operating loss as well of $238 million. Adjusted EBITDA was down 72% to $18.4 million. The major factor between that adjusted EBITDA and the operating loss is stock-based compensation on top of some depreciation, amortization. But the stock compensation was actually $285 million during the quarter. So a massive stock compensation expense, to say the least, when you're not even an operating profit. EPS fell to a further loss of 41 cents per share from a loss of 32 cents per share. But the KPIs, the key performance indicators, were great. And that's really what the market reacted to, sending the stock higher at the time. Hours engaged rose 57% to 27.4 billion hours. Only about half of those were Ryan. There are other players. Daily active users rose 41% to 111.8 million. And average bookings per daily active user rose 7.1% to $12.86. I will note that average bookings do have a bit more seasonality, with Q4 being stronger when the parents are spending all the money on Robux cards. But the general trend overall has been increasing. It's just not in a linear fashion compared to the other metrics, but that is expected given the cadence of it as well. Concurrent users have pushed past 30 million users, with management noting 20 million of those concurrent users at certain times are playing a single game, Grow a Garden, which I think Ryan's familiar with. He was mentioning it to me earlier, some of the games that he's played. Daily user growth had high engagement with 5 games, Grow a Garden, Steel Brainrot, Brookhaven, 99 Nights in a Forest, and Ink Games, all being the big winners of the quarter, of which 4 of those were actually launched in the last 12 months, which is actually quite key to Roblox's environment, since it needs that constant churn of those new popular games to drive both user growth and actually just retain users in general. it needs to have those hit games to actually have really any hope. This in turn requires attracting developers and brands that cater to the audience, like Lady Gaga, which Ryan was mentioning earlier, to hit its targeted 10% of the global gaming content market. As well, in the couple of graphs I have up, you can see the 13 and over category has risen at a faster rate than the under 13 category for both the hours engaged and daily active users. This is something management has been targeting to age up the platform for a very long time now, since its IPO, and they are looking to succeed doing it. I would expect that some of it's just the 13 or under users are obviously aging. They're in their teens now, so they would naturally age up the cohort, but you're also seeing growth in the under 13 as well. So good user growth overall. Shifting back to the financials, the balance sheet is great, cash rich, holding 4.7 billion in cash and investments, the investments are comprised of government debt and money market funds, so low risk securities, but they are considered long term, with about 1.6 billion in leases and debt, leading to a net cash position of 3.1 billion. As the bookings are upfront payments, so when you're buying those Roblox cards, the company benefits from receiving that cash up front before revenue and the related costs are recognized. But this leads to a massive deferred revenue liability, which they have 5.1 billion at this time. And on the flip side, right now it's really propping up those cash flows. On the flip side, if we do start to see revenue outpace bookings, it can actually create a drag on cash flows. If the Robux, the in-game currency, is spent and then redeemed by the developers once they get it's spent in game and then they can redeem it for real life currencies, the company will see the opposite effect of what's occurring now, cash outflow in respect to its revenue. That's not the case right now, but that is a risk if you do start to see either a slowing in growth relative or bookings slow relative to revenue growth, or if you saw an outright decline. But that's obviously not the case right now. Big growth at this time, but that is something I would like to highlight. Shifting to the guidance for 2025, revenue is expected of 4.39 billion to 4.49 billion. That's 22 to 25% growth. Bookings of 4.87 billion to 4.97 billion, 34 to 37% growth. However, they're still expecting quite a big net loss of a net loss of 1.26 billion to 1.2 billion, shifting into a further loss compared to only 941 million in the prior year, and they are effectively break-even adjusted EBITDA is the expectation, a loss of 5 million to positive 55 million compared to positive EBITDA of 180 million for 2024. So I shift further into negative profitability on those two metrics. However, free cash flow, on the other hand, is expected to grow to 60 to 69% to just over a billion to 1.1 billion. So big growth on the free cash flow side, and part of that is due to share compensation, which I mentioned before, being the differential. Now, using those metrics for some forward valuations from the midpoint, forward price to sales comes in at 18.3 times, and forward price to free cash flow comes in at 77 times. Neither of those are cheap. Those are quite expensive, to say the least, even given the high revenue growth and the high free cash flow growth. So wrapping up the segment, the key user performance indicators were strong, all growing at high rates, but that hasn't been reflected in profitability for the company, only revenue and bookings. Cash flows look better due to the nature of the business and the high stock compensation, but the company is trading at just a massive multiple at this time with respect to the sales and free cash flows. The two of the better really financial metrics at this time, given the other ones are at losses. Growth upside seems to be largely accounted for, and profitability is just not there yet. So we will continue to monitor the company and the stock, and I think Ryan will continue to monitor the game in general to see if it can shift into profitability, and then further look, can they actually grow profitability on a per share basis, because there has been like pretty constant dilution. And as for our disclosure, we don't have any position in the stock, nor do employees.
Yeah, it's an interesting company. Those three games that you had up there, yeah, I know those: Dress to Impress, Grow a Garden, and 99 Nights. Yeah, I mean, it is interesting moving as the kids age. Do they stay in, or how long do they stay in the row? I keep saying Roblox because that's what we buy, but it's Roblox environment, obviously. But like we have going on 20-year-old, and he doesn't really play it, but like the 10-year-old, like they're all about that environment right now. So do you age out of it? And they're trying, except now Candace plays it all the time.
Bring in the
So
number
I'm
up.
like, and they try to get me to play it. I'm like, I can't even work that. I'm just like, I just want to throw it out the window all the time.
Right.
But like, no, it is funny because like, and even her sister plays like too. So like, they're getting an older demographic there. I won't say too old because I shouldn't say that. They're getting an older demographic there. So and they enjoy it. So maybe they can get that too environment. So like, it was always like a gift card for Eden, like my daughter, and then this year she actually got, because the daughter wants her to play. So, and she's like, okay, I need a card. So she got one. It was either for her birthday or Christmas this year. So maybe the not really older, but somewhat older demographic can start gaining traction in the Roblox environment. I just get Roblox in my head because I got to go buy that card, but it's Roblox, obviously. Anyways, yeah. It's interesting, but the valuations are just massive. Like they just, it would like if there was another significant decline in the markets and you believed in this business long term. I mean, they could have a 60% decline and it would still be, if you looked on a valuation basic price to cash flow, it wouldn't look expressively cheap. So like that's the issue here. If there's any wavering in their growth, any of the issues that are potential that Brett thought about bookings versus revenues, if that turns negatively, you have issues here, right? Like, so, and it could be one of those days where you see a 40% decline. Now, if everything continues the way it is now, it's well set up business. It should generate good free cash flow, but I would buy it far cheaper if I had to.
Yeah, I think that sums that up well.